So you plan to retire, you're not yet 65, so you don't qualify for Medicare, and you're trying to figure out how in the world are you going to get health insurance. Well, that's what we're going to cover in this video. It's something that I've specifically had to deal with. My wife and I were not to Medicare age yet, and we are, I guess, retired, semi-retired, something like that. And so I've tried a couple of the options I'm going to share with you. So what we're going to do in this video, I'm just going to walk through 9 options to consider. I'll show you a number of things, including some tools you can use. Everything I show you, of course, will link below the video. So let's dive right in. I'm going to start with one that I'm going to guess doesn't apply to anyone watching this video, and that is you could use your spouse's health insurance if they're still working. I'm guessing if that's you, you probably don't need this video, but it is something to consider. If your spouse is still working, you might be able to get on their policy at their job. So that's number 1. All right, so with that, let's dive into number 2. Let me show you some resources as we go. Again, I'll link to everything. This was actually a survey about companies that offer retiree health benefits. In other words, you retire from the company and they will still continue to offer some form of health coverage. Let me see if I can enlarge this a bit. You can see this, all these lines trending down. These are various surveys that basically say, yeah, this is something that's not being offered as frequently as it once was. I think it comes up a lot with government jobs, maybe higher education. I've heard, I don't know if this is true, American Airlines, although I would suspect it's not a benefit today if you're just starting at American Airlines, but I haven't verified that fact. The point is, your job might offer some, retirement healthcare benefits. And so if they do, that's something that you want to obviously look at. It could be a great way to go. All right, number 3, and this is an option I used for a bit, and that's simply COBRA. Here is some information on COBRA that I'll leave with you below the video. This is from the U.S. Department of Labor. So the general rule is with COBRA is that you can stay on your employer's health plan after you leave the job, generally for 18 months, sometimes up to 36 months. We'll talk about that in just a second. But here's the deal. You, of course, are now going to be paying for 100% of the cost. While you were working, your employer probably picked up some of that cost, in some cases maybe a lot of it. So I can tell you, having used COBRA in the past, there's some sticker shock. It's a big number, and the company that will administer that plan will tack on an administrative fee of typically a couple of percent. So it's often not the least expensive option, but I think there are 2 things that make it at least worth considering. First is, maybe you only need it for a short period of time. Maybe you're going to get Medicare in 6 months, and so you figure, okay, for 6 months I'll deal with COBRA. So that's one possible scenario. The other is, presumably, that the insurance covers the doctors that you go to, and so you don't have to worry about trying to figure out a new health plan, and will it cover me for this, and will it cover me for that, and will this doctor take it? Of course, you can do all the legwork and figure that out for a new plan, and we've done that too. But there can be some comfort in just sticking with what you have. But again, it can be expensive. Now, I mentioned 18 months, but sometimes 36. And I'll show you this resource also from the government. And if we scroll down here, if the covered employee dies or there are other things that happen, divorce and legal separation is another example, or maybe they get off that coverage because they now qualify for Medicare and you don't, that might also trigger this. You can keep COBRA for up to 36 months. So keep that in mind. Again, I will link to that below the video. Okay, so the next one is just buying health insurance, on the public market. And I found the website actually fairly easy to navigate. Here's the important thing to keep in mind, and this really can apply to a lot of early retirees. You don't qualify for Medicare yet, and maybe you're not even taking Social Security, so your income is lower than it had been. You might qualify for the tax credits that come with the Affordable Care Act, but you have to buy the insurance through the marketplace. You can't buy it privately directly with the insurance company. We'll talk about that option in a second. To qualify for those premium tax credits, you've got to buy the insurance through the marketplace, and what's available to you is going to depend on where you live. So I will show you this tool, and again, I'll link to it. And I've used this tool before for myself and for family members, but you can go through this. It will tell you, based on the information you put in there, whether you might qualify for tax credits. So that's one option, buying health insurance in the marketplace. Again, it's going to vary from state to state. And the second idea, though, and you could use the same tool, is you might qualify for Medicaid. And it might be something you hadn't really thought about. But again, if your income is low enough because you're not working, maybe you're not getting Social Security yet, you might qualify for Medicaid. And this tool, you can see it right here, mentions Medicaid right there. It will also help you figure out if you qualify for Medicaid. So those are two options: public marketplace, particularly if you want to look at possibly premium tax credits, and then also possibly Medicaid as well. Now, as I mentioned, you can just buy insurance privately, right? You don't have to involve the government. You just go directly with an insurance company. You could hire a broker to do that. And I'll talk a little bit more about that because that's what we did in a slightly different context. But here is another tool that you can use. This is from healthcare.gov, and this helps you find plans outside of the marketplace. And so you can see there, I'm seeking coverage for myself and my family. It's probably the one you would select. And you go through a number of screens, and it might be able to help you find a good policy. As I mentioned, you can just go with a broker. I'll also mention one other resource. We're going to come back to it in a second, but it's this eHealthInsurance.com. I found this to be a fairly useful website too, and they have a lot of tools, and they'll show you what's available as well. Okay, the next idea is don't completely retire. There are part-time jobs, let me see if I can make this a little bigger, that pay health insurance. And this is from the Penny Hoarder website. I can't verify this information, although I do know, I'm pretty sure Costco does. I think you have to work 23 hours a week to qualify at Costco, but I could be wrong. I've also heard Amazon does, and Chipotle and Starbucks. Yep, there they are. So, maybe that's not for you. Maybe you don't want to work a part-time job, but it's an option, and some of you may want to, and you might be able to find a job where you can get health benefits that can cover you during those gap years before you qualify for Medicare. Okay, so what's next? We've got one option that I don't have much experience with. It's health sharing plans, healthcare sharing plans. A lot of these tend to be faith-based, and so it's not traditional insurance. You're sort of contributing to a pool and sharing costs. I've talked to people that use healthcare sharing plans. The one I've seen the most is MediShare. This is a faith-based Christian organization. It may or may not be right for you, but there are other sharing plans available. And I can tell you that the people I've talked to that use it are very happy with it, actually. And I don't mean MediShare specifically, but health sharing in general. I will be totally transparent. I don't think I would have the confidence to go that route. I want a contract with an insurance company that has to pay. That's just my own, comfort level. But the folks I've talked to that use that sort of healthcare sharing approach have liked it, and it is less expensive. So again, it's just an option to consider. I'll leave links to all of that below the video. And the last option, and this is what we do now, is we bought insurance through our small business. This is just, this is eHealth Insurance. We didn't actually go through eHealth Insurance to get our small business policy, but I'll leave this resource below the video. We worked with a friend of ours who happens to be an insurance broker and has relationships with a lot of the big insurance companies, and he helped us sort of wade through all of the things we had to do. Now, here's the thing. We're effectively self-employed, the only employees of our company, my wife and I. And so in some states, that would not be enough to qualify for group health insurance through your business. In Virginia, it turns out, because of a law that was passed, I think in 2018, but I could be wrong, it wasn't that long ago, we do qualify for group health insurance through our business. So if you are in some way self-employed, you're doing consulting, you have a side hustle that generates income, you should at least consider, depending on where you live, whether that entitles you to buy group health insurance through your business. Again, in Virginia, for us, it does, but the rules do vary from state to state. So those are the 9 ways that I could think of, and I did some research on this, of ways to cover your health insurance before Medicare kicks in. If you know of other ways, please leave comments below the video. We can all work together to share as much information as we can to help each other out. And again, I'll leave links to all of the resources I showed you below the video. Well, there you go. Hope this helps you. And until next time, remember, the best thing money can buy is financial freedom.